Hello, friends. Welcome to OAVA's weekly update on money and economy, the first one in the new year 2024. We begin with news on the global front with China, world's second largest economy. China's economy has been plagued by a wide set of problems in 2023, including a prolonged property downturn, record high youth unemployment, stubbornly weak prices, and mounting financial stress at local governments. The country's massive manufacturing sector had been weak for most of 2023, with the latest manufacturing PMI coming at 49 for the month of November 2023, suggesting contraction in industrial activity. The government's crackdown on businesses in the name of national security has also scared away international investors. In a speech made on New Year's Eve, China's President Xi Jinping acknowledged the economic headwinds and said these are at the forefront of his mind. He also said, "We will consolidate and strengthen the momentum of economic recovery." It is expected that China will target a growth rate of 5% in 2024 and may adopt expansionary fiscal and monetary policies to support the growth and step up infrastructure investment in the face of weak private corporate investment demand. Moving on to domestic news, recently one of the leading credit rating agencies, India Ratings, released their forecast for Indian economy. They raised the GDP growth estimates for fiscal year 2024 to 6.7% from 6.2%. However, on the fiscal front, the rating agency feels that due to higher than budgeted revenue expenditure and coupled with lower nominal GDP, the fiscal deficit may reach 6% of GDP, 10 bips higher than the budgeted 5.9%. The agency also expects a pickup in investment demand with gross fixed capital formation growing 9.5% in FY 2024. Moving on to news on Indian debt markets, FPIs, that is foreign portfolio investors, new investment in the debt market marked a 77-month high in December 2023 at rupees 18,393 crores. Overall, during the calendar year 2023, the total FPI investment into debt markets is to the tune of rupees 68,000 crore, which is a 6-year high. In fact, in the previous year 2022, FPI's net investments into Indian debt market were negative with outflows to the tune of 17,131 crore. The surge in inflows this year comes ahead of India's inclusion in the JP Morgan Bond Index, which would start from June 2024. Moving on to news on Vedanta, India's largest mining conglomerate promoted by Anil Agarwal, which has been facing issues with meeting its external debt repayment obligations. About $3.2 billion of debt is maturing in 2024 and 2025 for the company. Last month, it secured about $1.25 billion from private credit lenders to repay part of this debt. That apart, the company asked bondholders holding 4 series of its bonds to approve a restructuring plan to extend repayment dates of these bonds. More than 97% of bondholders of Vanta Resources, that is VRL, approved the restructuring. Now the loans will mature in 2026 and is guaranteed by Vanta Resources and its various subsidiaries, and has been collateralized by a negative pledge of 13.26% shares held by the parent in India-listed Vedanta Limited and the annual brand fee it receives from various subsidiaries. Finally, we end with news on India's stock market, which begins 2024 with key indices trading near all-time highs. As per analysts, in 2024, the outlook for Indian stocks remain positive as India continues to be one of the few countries globally that will record strong GDP growth with multiple positive drivers in place to sustain it, like rising digitization, formalization of the economy, improving infrastructure, and stable interest rates. According to experts, key sectors expected to do well include consumption, capital goods, infrastructure, BFSI, that is banking and financial services, auto, and healthcare. That's it from us this week. We wish all our viewers a very happy 2024. See you next week.